In this video, we're going to talk about how you can buy 5 or more properties, meaning getting 5 or more mortgages to purchase rental properties on an average income. So if you're new to my channel, my name is Koukun, and in this channel, we talk about real estate investing, career building, as well as money management. If those are of interest to you, consider subscribing. So this video started out as a question in one of the comments of my previous video on the BRRRR strategy. So it's from Raz P, who said, does rental income count to a lender for one's next property purchase? Don't understand how one can scale BRRRR while having 60K income from their day job. How is it possible to have more than 2 rental properties with that income? So let's start with that $60,000 income. The hard, honest truth is that if you're making $60,000 a year, it's probably going to be tough for you to get multiple mortgages. My suggestion would be to try to find someone else in a similar situation, earning a similar income, having similar amount of savings as yourself. Partner up with them so that your combined total income is closer to $120,000. And then you'll be able to qualify for more purchases, more than each of you could probably qualify on your own. Now, say you do find that partner and the two of you combined make $120,000. What can you actually qualify for when it comes to rental properties? If you just go simply to Rate Hub, they have like a mortgage qualifying calculator, how much you can afford with a $120,000 income. And the number that it spits out is about $800,000. This is just traditionally looking at what you can afford if you're buying a personal home. Now, when it comes to the mortgages for rental properties, it's very different. So if you're considering a rental property purchase, even in the Niagara region, we're typically paying around $400,000 at this point. So then technically, even if you're making $120,000, if you went by the traditional qualifying standards that banks have for you to qualify for your own home, you'd maybe get 2 rentals. But this is where things get different when it comes to rental properties. The goal of this video is to give you a high-level overview of a concept called rental offset. I'm not a mortgage broker or agent, so definitely I would highly recommend relying on your mortgage professional for the more exact, in-depth information regarding this. So most banks will allow you to have anywhere from 50 to 80% in what's called rental offset. What this means is that the rental income you bring in from a rental property, they will consider anywhere from 50 to 80% of that income to be subtracted from the mortgage payment. So let's get into a little example for this. Say Raz from the comments purchases a home for $250,000. His monthly income is $1,500 a month, and his mortgage payment is $800 a month, which is the approximate mortgage payment for a $200,000 mortgage. When it comes to making his next purchase, if the bank Raz goes to has a 50% rental offset, you can take 50% of the rental income, so $750, and subtract that from the $800 mortgage payment that the property has. So essentially only $50 of that mortgage payment is added to his total debt load. So it does affect him negatively on his next purchase, but by a very small amount. So basically, if his ratios are good, his total debt to income ratios are still solid, he'll be able to keep qualifying for properties with this rental offset. Here's something else to consider if you're trying to scale a real estate portfolio, meaning to get as many mortgages and as many properties as possible. Do not focus on the interest rate that the mortgage broker or mortgage agent is giving you. And I repeat, do not focus on the interest rate. I've seen so many investors make the mistake of simply shopping around for the cheapest interest rate without any thought about a long-term mortgage strategy to allow them to qualify and purchase as many investment properties as possible. So let me tell you why this is important. Some banks allow you to buy up to 5 properties, get 5 mortgages with or without them. If you come to them with 5 mortgages, you're out of luck. They won't lend to you anymore. Other banks allow you to get up to 5 mortgages with them, and they're okay with you having up to 5 mortgages with some other banks. Finally, there are some lenders that will give you up to 5 mortgages and they don't care how many other mortgages you may have with any other banks. So you could come to them with 10 mortgages, and if your ratios are still in line, they will give you up to 5 more mortgages. And something I've been learning recently is there are some banks that will even allow you to purchase through a corporation. So you open a corporation, put some funds into it, use that corporation to purchase. As long as your personal ratios are good, you can qualify for the mortgage, but you guarantee the mortgage goes in the name of the corporation. It doesn't even show up on your credit bureau. So there's a lot of different strategies when it comes to getting as many mortgages as possible in the residential investment sector. But with all of these, do not focus on the interest rate. If you focus on the interest rate and go to the wrong lender first, then you're shooting yourself in the foot in terms of being able to qualify for as many deals as possible. And sometimes the lender that's more flexible in terms of allowing you to have more debt to income, allowing you to qualify for a higher amount, may charge you a little premium in terms of the interest rate. As long as you're within the A lending sector, which is your traditional banks, your interest rates generally are going to be very good. So do not focus on the interest rates so specifically, like 0.1%, 0.2%. It makes no difference in the long run. You want to go to the right lenders at the right times. And here's one of the craziest things that I've come to learn. Most mortgage agents and mortgage brokers don't understand these rules that the banks that they work with have when it comes to rental mortgages. It's so important to work with the right mortgage broker or mortgage agents who understand all of these rental rules, the rental offsets, what the banks have that they will allow, what kind of programs they have. So definitely really trust and value the relationships you have with your mortgage professional, especially when it's one who knows these details in and out, because there's very few of them that actually understand the mortgage game when it comes to investment property mortgages. Now, finally, the last point when it comes to scaling a real estate portfolio and getting multiple mortgages, you need to have a good income. This, unfortunately, is the hard truth. Again, like I mentioned, $60,000 may not be a sufficient income if you really want to scale an investment portfolio. Do whatever you can to increase your income, get a better job, switch careers, do what it takes to get, I would say, ideally an income over 100,000. And if you're married, then that's over 100,000 combined. If you're single, maybe find a partner if you have to get above that threshold. And if you're self-employed, what I did, I've been a realtor now for a couple of years. And in the first year that I was a realtor, I actually did not deduct any expenses. So I paid taxes on my total income before deducting any business expenses to declare as high of a personal income as possible. Because when you're self-employed, the banks look at your 2-year income average to start qualifying you for mortgages. So I bit the bullet, paid more in taxes than I needed to in order to be able to qualify to refinance some properties and to be able to purchase some properties. The properties you purchase itself need to be cash flow positive, and the more the better. Unfortunately, income from a student rental, Airbnb income, the banks don't like it. It may be a significant cash flow, but they're not going to count that towards your rental offset. So personally, I highly recommend long-term rentals with good cash flow wherever you can find them. That's going to be one of the best ways to scale your portfolio and keep your ratios in line, especially as you get past 5, 10 properties. So at the end of the day, what's the point of all this? I personally know some investors who've scaled their investment properties to beyond 20 properties without any partners, just them qualifying for each of their purchases. This is something that is probably going to be harder to do with today's rules, with today's stress tests and what the current lending environment is right now. But getting to at least 10 properties if you have a strong income and if you have good ratios, so each of your properties have a good cash flow to allow you to qualify for the next one, is definitely still doable. Like, I just want to repeat again, I am not a mortgage broker. I do not work in the mortgage industry. I don't get to speak to the underwriters and see what happens in the back end of these banks. This is just my own understanding of how to get multiple mortgages from being an investor, working with investors, and just speaking to different mortgage professionals over the last 7 years. So take it with a grain of salt. This is just a high-level overview. Definitely trust your mortgage professional. Work with a mortgage professional who understands the rental lending landscape, and then really rely on their advice. Don't rate shop them. Don't cut them off and go with the rep at the bank who's giving you a little bit of a cheaper interest rate, because they are going to be a valuable resource for you to be able to scale your portfolio. So I hope that helps. If you have any other questions relating to mortgages, feel free to comment below. If I don't know it, I'll reach out to one of my mortgage contacts and try to get the answer for you. If you're interested in finding properties that have sufficient cash flow for you to be able to scale your investment portfolio, I personally really like the legal basement apartment properties. So when we buy, a bungalow or a side split and we add a legal basement apartment, what I find is that the cash flows are sufficient to allow you to scale your portfolio. And if you're interested in that strategy, I've created a guide. You can get it in the comments below by going to legalbasementapartment.ca. It's a free guide that goes into the details of what you need to do in order to add a legal basement apartment to a rental property. So until next time, all the best.